What's up, people? Welcome back to the program. It's hitthebid.com, a fully functional, fantastic hangout for us traders, growing every single day. And I want to thank everybody to joining up, because the people that are joining the website right now are dedicated people that are trying to figure out how to make money, and they know you come into the chat room, there's ways to make money. And as I always say, take what I say on this show as tongue-in-cheek, take it as comedy, take it as entertainment, take it as an enticement to come hang with what I'm considering the best group of people on the street. So, and we have fun, and we don't care. We don't care about foul language. We don't care about talking naughty. We don't care about expressing the way we feel exactly at every time of the day. Nothing is restricted here at hitthebid.com, and that's the way I like it, and that's the way it's going to stay. What's up? So, U.S. Steel reported their earnings, and if you listen to Joey Diphard, which I thought and I hope many of you did, apparently in the chat room people did, you shorted some U.S. Steel after he got out. That was in the 60s. Congratulations, the earnings came out, and par for the course, we're going down on an earnings report, because that's what's been happening. It's time to put up or shut up, as I was saying about 2.5 weeks ago, that most companies, there's no reason to be holding any stocks into these earnings reports because of the tremendous run that we've had. Now, looking ahead to the future, we are going to continue to do the same thing. And I always stress that at the end of the day, in this environment, how it drastically changes day to day, what you want to do is to stay into cash. Now, you want to know how and why I do this and how do you make money. And there was somebody left a comment on one of the YouTube pages and said, Jefferson, what I think you should do is you should be doing some research on some Dow Jones companies that shouldn't be trading. Look for companies that are bankrupt that should be going out of business. Or look for some penny stocks that are undiscovered to try to make some money on, so you can entice people with real money to come to the chat room to make some money. Now, first of all, penny stocks are not allowed on the website. That is one of the things that I try to prohibit on the website, because you know what? There's 5,000 of you guys out there with your penny stocks and talking about how you got 00018 and the stock's flying because it's at 00019. This is the new Microsoft. It's going to be fantastic. And then a day later, the stock is gone, wiped from all existence. Penny stocks are a loser's game. Unless you're going to sit there and you are the pumper. That's the guy that is sending the spams that you get every morning, sending the information and pumping the stock up. And if you see a stock that's gone from 3 cents to 30 cents and you're getting in now, like I always say, you deserve to lose your money. And I'm sorry if that's what you're going to be, if you want to come to hitthebid.com for penny stock information, you're not going to find it here. So go elsewhere. You go to stockhideout.com. There's 650 people in the chat room trying to figure out what the next Microsoft is and the cure for cancer in there. You go ahead and play those stocks, okay? So, also, what I do here is I try to find situations during the day that we can make money on. I consider penny stocks the lowest rung of existence of the stock market. But you know what? The way I am and the way that I've learned in my 15 years of doing this is that you can't trust any of this. You can't trust upgrades. You can't trust downgrades. You can't trust CEOs. What you can trust is the way the stock is moving and support and resistance, volume coming in, reversals, and that kind of thing. You want to go as far as Bollinger Bands and stochastics and Elliott waves? I gotta show you, I bought an Elliott wave hat. It's a big tinfoil hat to protect me from the Elliott waves. You go and figure out that stuff. The idea here is to try to keep it simple, and I give you some information, and you take it for however you want. Now let's take a look at the chart on HEAT, yesterday's chart on HEAT, a stock that I was saying how I liked. Wasn't telling you to invest in it long term. If you were gonna go into it long term, I said maybe 100 shares or 200 shares, because again, like China, like U.S. Steel, as a brilliant person in my chat room said, if you're buying U.S. Steel here at $63, $64 a share, you're basically investing in the real estate bubble of China. Now again, we don't know what China is all about, and we never will. Don't forget it's a communist nation. Their GDP does not equal the same GDP as we report. They make that stuff up, okay? The companies there, you don't know exactly what they're reporting. It's a communist nation. Don't forget, if you don't trust the U.S. government, how are you going to trust the Chinese government? please now. So what these stocks are good for, as any stock is really good for, is a trading vehicle. You might have a few stocks out there that you can trust, like New Jersey Resources, a stock that I've owned for 10 years now because we had a house in Jersey. We know that we pay these guys every month. We know they increase their rates every month. They pay a dividend. NJR, I've owned the stock for 15 years. I've been 10, 15 years getting the dividend. The stock's maintained stock value. I don't mind owning that stock because at least it's paying me a dividend. I know they're a real company, and I know they're doing something that probably won't go out of business. So that's something legitimate. But as far as these internet stocks and chip stocks, do you really know chip demand? What you're learning is basically from reading, listening to CNBC or whatever news channel that you get, and what you're trying to figure out is you're taking the majority of negative or positive spin on the stock that you own and then making your decision that way, which basically means you don't know anything. So the idea is do what the market tells you to do and try to make money. So that brings me back to the Heat, a stock that we were liking at $14 that went to $18. Now this stock came from 3. Who the hell knows what this thing is worth? But the bottom line is yesterday it was getting hammered again, and I said, listen, look at the stock. The stock has made a triple bottom at $12.70. That means basically at $12.70 there became more buyers than sellers, and every time it went to $12.70 it bounced. So I said, let's start buying it here at $12.70, $12.80, and $12.90, and if it breaks $13.05, it should have a move up. Lo and behold, of course, the Kroll effect took control of that stock. We were buying it at $12.70. My cost average was $12.85. Stock broke 13. I immediately offered out 1,000 at 13.20, another 1,000 at 13.30, another 1,000 at 13.35. And what happened to the stock? Take a look at the chart. And if you were in the chat room, you saw that and witnessed it firsthand. That is the Kroll effect. The Kroll effect is if I'm taking a profit on the stock, 85 to 90% of the time the stock keeps going up. I don't understand it, but it's going on for 15 years. 15 years now. 85% of the time, stocks go higher after I sell out of them. Or if I'm shorting them and I cover, they go out of business. I am either the savior of companies or I am the destroyer of companies. That's all I can say. And if I want to take credit for the U.S. Steel, because I was shorting the stock at 63 that day, and I was very afraid of the stock because it just blew my mind that it went from 35 to 60. So shorting the stock was kind of difficult. So I decided to take my little bit of profit, and that started a whole onslaught of selling in the stock. So now they reported their numbers, and what do we got? What do we got? U.S. Steel down is $3 today. So now we'll see what happens. If this thing breaks 50, you know what? There's a good chance it's going to go down to 45. And I say if, and it could, because I'm just going to be like everybody else on CNBC. Because if you listen to the analysts come out, do they ever make a real prediction? Even when they say they like the stock, they say buy it on a pullback. So if it goes down, I said, oh, well, I told you to buy it on a pullback. And if they love the stock, if they hated the stock and starts rallying, you know, they say, oh, if and when, this could happen. Everybody makes predictions, and they put those key phrases on it so they can look smart in the future. Because, you know, they don't want to ruin their reputation because of the high education that they have and their MBAs and their status at their firm, wherever they are. But, like I said, if you want to make some real rules, Mr. Obama, let's make the 3-strike rule. I think everybody should be fired. Let them start their own firm. They think they're so smart. If you give a recommendation, and it's a publicly known recommendation, okay? In-house, you keep it quiet, whatever. You're going to go on television and tell mass media that you like something, and it's a fail, boom, that's a strike against you. That's 1 strike. You get 2 more chances. If you fail 3 times, I think you should be fired. You should be fired. You should be held accountable. Just like the CEOs and just like everybody else. We're still trying to figure out where the AIG money is. We're still trying to figure out where the Madoff money is. Figure it out. Do something more important. Screw healthcare, okay? Put that aside. Protect the borders. Kill terrorists. And figure out where the money went. How about that? How about that, Obama? Do something like that. Healthcare's done. You aren't going to help me. Anybody I don't know that doesn't really care about the healthcare plan, because you know what? It seems like it's not going to help anybody. All right, let's move on. Get to the chat room, hitthebid.com.
Your mother likes it.